I'm Russell Clark, and this is VixShield's Morning Outlook, where it isn't news till we talk about it. Before we look at today's signal, let's talk about what's keeping me up at night. You know how Thursday always feels. One day left in the trading week, and suddenly every loose end from the Middle East, every whisper out of Washington, every little inflation surprise starts to feel heavier. The big money doesn't sleep. They reposition while the rest of the world is still hitting snooze. And that's exactly why we lead with caution today. Protection first, discipline always. Because our iron condors are built to survive days when the narrative could flip faster than anyone expects. Let's start with what happened overnight. While most of you were catching whatever rest you could, the futures told a story of fragile relief. The de-escalation signals out of the Strait of Hormuz that we tracked all week, they held. Trump's pause on those escort operations, the diplomatic push at the UN, even China stepping in behind the scenes. It all pulled some of the immediate risk premium out of the market. Asian markets leaned into that breathing room and posted records. European bourses followed with modest gains. Yet underneath it you could feel the tension. Iran still claiming battlefield superiority, tighter credit conditions rippling through Gulf real estate, a shooting incident near the vice president's motorcade rattling Washington. These aren't yesterday's headlines. These are live wires that could spark again at any moment. And then came the economic prints. Stronger than expected business expansion data gave the bulls some oxygen. Yet right behind it, that hotter than expected producer inflation number landed like a warning shot. The kind of surprise that reminds everyone the higher for longer reality isn't going away quietly. Consumer confidence readings were due, and traders braced. You could almost hear the collective pause in the tape. SPX futures held near recent highs, but refused to run. Bitcoin stayed buoyant above 80,000. Gold caught a bid on any lingering safe haven whispers. Crude gave back ground as the de-escalation narrative took hold. The big boys were busy, institutions quietly trimming exposure ahead of today's Fed speeches. Market makers adjusting their gamma profiles in thin overnight liquidity. Retail, of course, was mostly quiet, still digesting yesterday's mix of ceasefire hope and political violence. That's the setup we woke up to. A market that wants to believe the worst is behind us on geopolitics, yet knows one broken ceasefire or one hot inflation follow through could change everything before the closing bell. Now here's what the big media is telling you this morning. They're painting a victory lap. Record highs on the S&P, NASDAQ pushing higher on artificial intelligence momentum after that AMD earnings beat, VIX supposedly tamed. The narrative is risk on, all clear, party on. But you and I both know that's only half the story, and the half that sells advertising. What they're not emphasizing is how quickly those record highs were built on compressed volatility that still sits right in the caution zone. They gloss over the fact that Israel struck Beirut again, testing that fragile Middle East ceasefire we've been watching for days. They downplay how producer prices coming in hotter than forecast feeds directly into next week's consumer price data and keeps the Fed boxed in. Why does the mainstream push this sunny version? Because fear doesn't fill airtime the same way hope does. Because hedge funds that are long need retail to stay long. Because admitting that geopolitical de-risking can reverse in a heartbeat doesn't fit the easy storyline. But we see through it. That's why this community exists. While the talking heads chase clicks, we focus on what actually moves premium and what actually threatens our capital. The reality is we are in a window where tail risks have shrunk but not vanished. And that's precisely the environment where discipline separates survivors from casualties. Let's zoom out to the geopolitical landscape because it matters more than ever on a Thursday like this. The diplomatic progress with Iran is real. Trump citing meaningful headway toward a peace deal, the pause in Operation Epic Fury, China's engagement in Beijing. These moves extracted a genuine risk premium from oil, from gold, from volatility itself. Yet Iran's claims of battlefield superiority and those IRGC warnings about the Hormuz corridor remind us that peace on paper doesn't always equal peace on the water. One tanker incident, one broken commitment, and the whole risk premium floods back in. Add in the domestic side. That shooting near Vice President Vance's motorcade, the suspect now in custody, the political rhetoric heating up around it. Policy uncertainty is not abstract. It shows up in bond yields, in dollar moves, in the way institutions reposition ahead of Fed speeches from Hammack and Williams today. Those speeches are the numbers that could change everything. One hint of tighter policy, one reminder that inflation isn't licked, and the VIX term structure we're watching so closely could shift from friend to foe in a hurry. Remember what we said in yesterday's closing analysis. Any breakdown in ceasefire rhetoric would likely produce rapid volatility expansion. That warning still stands this morning. The PPI surprise only reinforces it. Strong PMI data gave bulls breathing room, sure. But resilience on macro beats can evaporate when geopolitical shocks reappear. That's the tightrope we walk today. Our methodology doesn't ignore these crosscurrents, it respects them. Which brings me to how this sets up today's trade. Our iron condors are built for days exactly like this. Days when the market has digested de-escalation signals, yet still carries undercurrents of credit tightening, political violence, and inflation persistence. The RSAI engine has spoken. Entry criteria are met. We have a place day. Both gates opened. That matters. It means our system sees enough contained volatility to harvest premium, but not so little that we throw caution to the wind. VIX at 17.36, elevated but still below 20. Conservative tier is green. Safe to place. Balanced is yellow. Tradable, but sized down if you're cautious. Aggressive is yellow. Tradable with extra caution. That language comes straight from the risk scaling rules we've followed for years. And today the rules said place. Our RSAI verified signals are locked in. The Rapid Skew AI engine did the work, so we don't have to guess. This is why we built the process. It removes emotion when the headlines want to push us one way or the other. Now let's talk about the VIX term structure, because Thursday demands we give it extra depth. The curve sits in strong contango. VIX futures are sloping upward in a way that tells us the market expects volatility to stay relatively contained over the next 1 to 2 weeks. That spread between the spot and the 3-month reading isn't screaming fear, it's whispering stability. For our iron condors that's favorable, it means the premium we collect today has a natural tailwind from the way volatility is priced across time. Yet here's the protective part. If that contango flattens or flips because of a geopolitical flare or a hawkish Fed tone, our ALVH protection is positioned to respond. Even though no new layers triggered overnight, the existing structure stands ready. That's the beauty of adaptive layered VIX hedge. It doesn't panic with every headline. It waits for the real expansion and then does exactly what it was engineered to do: cut drawdowns without eating too much of our capital in quiet times. You know what separates us from the retail traders who are probably staring at their screens right now, wondering whether to chase or to hide? We don't chase. We don't hide. We execute a methodology that has been stress tested through every kind of regime. This community understands that flat action overnight, mixed economic signals, and simmering geopolitics are not reasons to freeze. They are reasons to show up with a plan. We are the insiders, folks. While everyone else is guessing what CNBC thinks, we already know what the brain computed. We listen. That's what keeps us in the game year after year. And that's why you are here. That's why we built this. Because you can't talk to your family about short-dated premium collection and volatility term structure. They don't get it. The guy at the barbecue doesn't want to hear about RSA skew adjustment or EDR range forecasts. But in this tribe, we speak the same language. We celebrate the days we collect solid premium. We learn from the days a wing gets tested. We protect capital first, always. That conservative mindset isn't fear, it's preparation. It's the reason we can look forward to tomorrow with genuine optimism, even when today carries extra risk. Here's what we're watching as the day unfolds. First, those Fed speeches. Hammack and Williams will speak this afternoon. Any shift in tone on rate path or inflation persistence could move the VIX faster than the equity tape. Pay close attention to how the bond market reacts. Second, any update out of the Middle East. One headline that questions the durability of this ceasefire, and we could see safe haven flows return in a hurry. Third, how the S&P behaves around recent highs. Does it consolidate the gains from the AI rally, or does it roll over on profit taking? These are the things that will determine whether today's place signal stays comfortable or starts to feel the pressure. We'll have the full closing analysis ready at 3:05 Central Time. And be sure to listen for any breaking news from Miss Vicky. She'll flash the moment something material develops. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.